Welcome to My Talk, the podcast series brought to you by ISS Market Intelligence. Thank you so much for tuning in. The focus of our discussions on My Talk is the global retail financial services industry and in all of its different subsegments, asset management, fintech, you name it. For more than 3 decades now, ISS Market Intelligence team has been a passionate student of this business globally. So the mission for this podcast is to really peek behind the curtain or the industry headlines and try to really think about the implications of the various developments and trends. And to do so, we are lucky enough to always be able to line up some really interesting guests, thought leaders, industry experts to help us think through some of those ideas. We do create new episodes monthly. So please, if you enjoy this episode of My Talk, remember to subscribe to our podcast on your preferred podcast platform. My name is Goshka Folda. I'm your host and Global Head of Research at ISS Market Intelligence. In the last episode, we took a deeper dive that our forecast of the U.S. Investment fund business. This area of work has been kind of our stomping ground for more than 3 decades, going back to our genesis with Strategic Insight in New York. And investor economics in Canada. Today, we're going to pivot away from the investment funds manufacturing side of the business and focus on distribution. What I think is very important to think about that, notwithstanding the great work that goes into putting together compelling investment strategies and products in the investment funds arena, without a winning distribution strategy, the battle is probably not going to be won. So start looking at the distribution paradigm in the US by taking a deep dive into the eponymous RIA channel, which garners interest not only in the US but actually globally, as in many ways it is the flag bearer for the advisor independence movement. But is changing. It's been around for decades, but it is changing. And so must the asset manager strategies, how to build business win business from advisors and firms in this channel. So to illuminate on this particular topic, I'm joined by my ISS Market Intelligence colleague and longtime friend, Dennis Gallant. Dennis is Associate Director on our Product Engagement Specialist team, and he brings with him a wealth of industry knowledge, deep expertise built through a great career in research consulting and advisory. I like to call Dennis our US wealth management research guru. He is one, without any doubt. Dennis is right now in the process of putting the final touches on our new research study that is going to be exclusively focused on the RIA research and is going to leverage the wealth of data and information from a variety of sources that we have within ISS Market Intelligence. Welcome, Dennis.
Thank you, Goshka. Thanks for having me.
Thank you. So let's get right into it, Dennis. As I mentioned, the RIA market has been around for decades. Is it still an area of focus in the marketplace? Is it still an area of focus in the marketplace?
You know, it is an area of focus. In fact, it's a kind of a renewed focus in the marketplace. Now, if you go back, the RIAs are certainly been this movement for the independence in the U.S. marketplace, right? Or at least pure independence, right? We've always had sort of a bellwether of trends in the marketplace. They led the whole move towards fee-based pricing. They're the leaders and still the leaders in adoption of financial planning and financial advice. So it's an attractive market to look at because whatever the RIAs are doing, it's slowly making its way through the traditional channels. Right. And, and part of the challenge in the marketplace is that we're seeing blurring lines between this distribution. But the reason RIAs are still that area of focus is, one, it's a hard market to get your arms around because it is independent and fragmented. But it is the benefactor of growth from other channels. So where we see some growth from other channels. So So where we see some firms either struggling to grow or we see other channels, contracting a bit, you're seeing the RIA market actually gain in terms of firms and assets at the expense of every other channel. So it is the channel of growth. It is the channel of large growth. It is the channel of large practitioners and of those that are considered sort of best practices in the marketplace. So I think every firm is if they're not targeting it, they're refining their efforts to go after the RA marketplace again.
So that's a really great point. That is that this is kind of a critical of every firm's asset manager's distribution strategy. But I think that you point out in your research that the RIA channel is changing, and it's different than what we would have considered to be a typical or prototypical, single practitioner advisor, fee-based advisor, financial planner of the yesteryear. How has it changed?
It's two things. Some of it hasn't changed at all in a sense that it is still a wide-ranging, very geographically spread marketplace, right? They range from mom and pop shops to these large, they're in the marketplace. And I think firms have always struggled with how do we identify the types of firms that are most likely to use our services, our products, our capabilities, and how do we support such a diverse area, right? Geographically, there's no centralized access with a broker dealer. So those issues still exist in the marketplace. What has changed is the nature of a couple factors. One is, you see this fintech revolution. So the marketplace has been matured in a sense that you're seeing firms that have always struggled with the ability to scale an independent practice. In the past, you had to pull together all your technology and your tech stack, and you had to do a lot of stuff by yourself. You didn't have a home office. Formalization of the marketplace that has really, really accelerated the ability for advisors to sort of break away and say, go independent and set up their own RIA shop. And not only set up their own RIA shop, but really scale that business. And so we've seen a much more growth in professional practices that are out there. Where firms, we used to track firms that were, back in my old Cerulli days that were, half a million and up in assets, right? We're talking firms that are 5, 6, 7, 10, 20, 30 billion, 100 billion with terms of being an aggregator plus. So we've seen these to this enterprise realm. We've also seen a nature of the types of advisors that are going independent. In the past, to become an RIA, you sort of had to be an entrepreneur, right? In the pure sense that not only did you want to pursue fee-based, but you had to figure out how to run your own business. And there's still a bit of that overhead there, but the tools, the capabilities are making it much easier. And so you're seeing a lot of advisors coming in the marketplace that have a different approach to the market. They're more planning oriented. They're more service oriented. They're more likely to maybe even delegate assets rather than manage it themselves. They may be interested in joining larger firms. So I think that technology has changed the way the marketplace has looked, the large and scaling of these advisor practices, right? And there's sort of changed behavior. I think for a lot of firms, while there's still distinct channel, there's a lot of overlap in this whole fiduciary environment that's growing in the U.S. marketplace. We're finding better centralized access points to the marketplace. So it's become an opportunity because it's growing in assets. It's become a growing opportunity because the advisors are a little bit more, there may be more opportunity to sell in a traditional sense. And it's changing the way firms are even looking at them from how they're deploying sales teams. Do I have a dedicated effort or not? But we can talk about that in a few.
Yes, Dennis, that's such a good point. I mean, in some kind of maybe funny way to think about it, the advisors that love the more traditional channels, like the wirehouse channel, are now increasingly starting to look like environment that they have left behind. But I know you'll dig into this a little bit, but I did want to drill a little bit into the expansion of the types of services. I think you mentioned the role of asset management, but also financial planning. Can you elaborate on that?
Sure. So advisors overall.
Financial planning. Can you elaborate on that?
Sure. So advisors overall are expanding their role in wealth management, right? Whether they like it or not, you've got aging. We've talked about this in past podcasts, right? You've got the retirees and boomers entering retirement. You've got Gen X, you've got Gen Z moving into the ranks and accumulating assets. Advisors have been trying to also justify their fee, and their services and capabilities have expanded those capabilities. So investment management is just a part of what they're doing now. They're doing more planning, more holistic advice delivery. There's banking services being brought into the realm, right? And that's created opportunities because they're servicing and providing clients with more services, capabilities. They're servicing a wider range of clients, right? But it also creates some capacity issues too, right? So they've got that more scale, right? Which is why fintech and some of the other capabilities help them expand those services. So fintech has allowed them to scale their business. So fintech has allowed them to scale their business. Teaming up and consolidation has allowed greater scale, but they're still grappling with capacity issues, right? And it's driving some cases, some of the M&A activities that are going on there. How do you keep all the balls in the air? So again, there's a broader array of capabilities and services beyond asking these firms. It's really driving change in the sense that it's hard to deliver advice and manage money, right? And so it's driving these firms to expand and grow and merge and consolidate and scale, and that's a big driver in that marketplace.
And I think that's like a perfect segue to the kind of the changing role of asset or investment management. I think is a perfect segue to exploring how these firms are changing in the way that they secure the product or investment management or asset management services from their providers. Can you talk a little bit about the rising role of the pro buyers at RIAs?
Sure. So RAs have always been, manage the money themselves. They broke away. Many of them came from the investment management industry. So as a core coming out of the trust and asset management industry, going back into the early 90s, right? Many of them came in with this new service, and they're portfolio managers by trade. Um, but for a lot of the advisors, the money management again is an area where it's getting harder. It's becoming more and more competitive, and competitive pressure of their business to go after more affluent clients. And affluent clients have greater demand for services. They want alternatives. They want more sophisticated portfolios. So as those groups of advisors and that competitive pressure to go after the affluent market, that competitive pressure, REAs have had to step up their role in asset management. At the same time, because they're doing all these planning issues, right, and they have all these tools that allow them to scale their business, there's like, well, where do I find the time to really do all of this? And so it's created sort of a bifurcation in the marketplace. And and for a lot of RAAs, they're either looking to I'm going to join they're either looking to I'm going to join a firm that has greater investment capabilities, or I'm going to build out my own CIO team and capabilities. So you're seeing a lot of these team practices build out a CIO team, and they get 3 or 4 analysts. And these teams could be 10 analysts, could be 3 analysts, could be 20. And investment management's become more sophisticated because it can be. We can integrate more solutions. And the advisors realize to compete, especially in investment management, where's the best use of my time? Is it doing client development, doing advice, or managing the money? And in a fiduciary environment, think of it too. These are all fiduciaries now, right? So, the advisor can certainly manage parts of the portfolio, but there are certain sleeves of the portfolio where they can't add enough value. They don't have that expertise. So if you're not adding that expertise internally, then you need to consider outsourcing and delegating it. So no matter which way you turn, the advisors are either becoming more pro buyers, where they start to look very institutional like in how they're managing money, and they have a very structured approach, right? Or the flip side, you're dealing with an outsourcing where they may be using an SMA manager, or they may be using a model portfolio for sleeve of their portfolio, and to access and to access those products is through a different provider and through a more pro buyer experience. So we're seeing a much more pro buyer environment across the marketplace. I was just writing a section on SMAs, and SMAs aren't very big into dual contract SMAs, right? Because in some ways that's what they do, right? I'm a dual contract, that's what I do. Why would I give up? That's the core of my role. I'll use a single contract here and there, but even that world is changing here and there, especially as you get these breakaways entering these firms called what we call super hybrids to the aggregators, where they're starting to join teams where they are providing solutions to a wide range of folks. And I think the best example of this pro buyer movement is what we call these enterprise RIAs that are emerging in the marketplace. These are shops that are behaving more like a large enterprise. These are shops that are behaving more like a large enterprise institution, given the name, than their predecessors. And I think that's a huge area of focus among asset managers, but I think across any vendor going to the RIA marketplace is looking at them.
So we'll circle back, Dennis, to the topic of how get RIAs impacts the type of engagement that asset managers have to bring to the table and that relationship. But let's maybe just quickly do a level set on how we define enterprise RIAs. I think you use the terms enterprise and then also hybrids, aggregators. Can you unpack that for us a little bit?
So yes, and it's not a it's an area or a group that every firm defines slightly different, right? So we've seen a lot of consolidation and M&A activity, right? We've seen growth in team practices. So we see these advisors crossing the $1 billion AUM mark. Advisors crossing the $1 billion AUM mark start getting the 7-8 billion. And as you start to see this emerging group, you see these enterprise RIAs that provide a more centralized approach to how their business. So they range in different types of firms. On one spectrum, what I call super hybrids. These are firms These are firms that are affiliated with an independent broker dealer, or may even have their own brokerage license. Right? They came out of the independent BD marketplace. These are called OSJs, long in the independent. But these are firms that have built, think of it as a broker dealer within a broker dealer, or they built a wealth self. So they've centralized fintech, they've centralized compliance, they'll help with business development, right? They'll help with your marketing, they'll help with money management, whatever you want to do. And so to attract, especially advisors that are looking to leave the confines of the wirehouse and hope to monetize their practicing by going independent, these are for those solutions. I can go to a super hybrid firm and it's a very turnkey solution, and I can scale up my business really fast, and they can help me convert things. And again, they've centralized a lot of those capabilities. They even, in some cases, with these firms, you're even an employee of the firm, right? You're operating on their ADV. So from an asset manager, right, you're operating on their ADV. So from an asset manager, well, I'll stop. But so we've got that group, and then it runs the spectrum of firms like Hightower and Focus Financial, which are aggregators, right? CI Financial. These are firms that have acquired other RIA firms, and the consolidation continues, right, to scale those practices. Because again, even if you've grown to $1 billion in assets, to get to the next level, to really scale your business, like anything, there's the technology requirements, the infrastructure, the compliance keeps exponentially rising with it. So the aggregators have come together to help consolidate that. It's a way to also monetize your business faster, right? So RIAs can find that. But again, you're seeing a lot of these firms start to centralize capabilities. Now, not every firm centralizes everything here, right? So asset managers still have to, and other firms still have to think about whether are they centralizing all the technology. So if you're a performance reporting provider or an asset management firm, you really have to understand what firm you're talking to. And there's around 40 or so of these firms, of them call them mega RIAs, but they become really attractive because they are centralized, because you can go through a centralized portal, that there is a known entity of firms that are tied to this. And again, whether you're pushing your technology platform or you're pushing, certain investment solutions, it becomes a centralized access point. And these firms, we're talking, most of these firms are north of 10 billion in assets under management. That is exceedingly high. So it's attractive because of their centralization, and it's a growing market. We're seeing every day there's another firm that crosses that line into what we consider the enterprise marketplace. And I think that speaks to what I mentioned in the first place. This professional and a professional, business growth of the marketplace has been pushed for years, but I think it's finally manifesting itself, where they're not just little independent shops and mom and pops, that they're really trying building out as business lines.
Yeah, that's such a that is also how asset managers then engage with these various entities, and I guess they have to cover the waterfront from the mom and pop shop all the way to the, as you described them, the mega RIAs with centralized access points. What are some of these sales support challenges that you're seeing as you're talking to the various asset managers and wealth managers?
the the historical issues are still the same, right? It's coverage of this marketplace. As you mentioned, there's mom and pop shops. There's large, there's mid-sized teams. There's large teams. There's mega teams. There's the mid-sized teams. There's large teams. There's mega teams. There's the enterprise shops that are out there, right? And there's always new firms. We're seeing new firms enter the market all the time, and there's lots of different ways you become an RA these days too, which complicates it, right? You can stay within a firm like a Commonwealth Financial and still become become an RA firm that's custodying with Schwab and multiple places. So the marketplace is definitely blurring, and that's a challenge. The asset managers are still trying to think, how do I best deploy? I can't dedicate enough wholesalers or Salesforce team to cover all the marketplace. So segmentations become really critical here, where firms are focused on those higher become really critical here where firms are focused on those higher end firms, the half a billion or 750 billion all. There are many that look at that pro buyer status too, or they're looking at the aggregators. Is a more centralized approach? If they're a more professional money management approach, right? So I think firms are thinking, how do we deploy the marketplace and what makes sense? And it really depends on who you are as an asset manager. Many of the large tier asset management firms that have had already a good stake in the RA marketplace are starting to actually dechannelize and saying, look, at a 750 and above in assets under management, and because we're seeing breakaways move go, and now they're an RA or they're with a super hybrid, have they really changed their business model? And do I need to change the way that I'm deploying coverage for them, right? There's a lot of debate. Some firms allow it to lag, some make it go to a different direction, but some firms are saying, look, I'm looking at a business model, and at a business model at that level, whether they're at a wirehouse or regional broker dealer, an independent BD, or a pure RA, they look the same. And so that's an efficient way of doing coverage. But not every firm is going to be able to leverage that same approach. There are some firms that just don't have the bandwidth, or maybe they've not had a big stake in the RA marketplace. RAs are an area where they still require a more dedicated effort. They are still a little bit different than the rest. And so if you've got the right, more senior, more CFA oriented wholesalers, this is a marketplace that you may want to dedicate more time and effort to build that. The one thing that's clear, and this goes VAs, is that this is a marketplace that is saturated, right? Advisors are not wanting for access to managers, right? They've got managers at every turn. If anything, the fintech world and the platforms are plugging even more capabilities and managers into the pipeline. And so firms always have to think about where's the, it's more, and so firms always have to think about where's the, it's more important about showing dedication and commitment and consistency, right? RAs want firms that are committed to the marketplace and understand that it's a longer sales cycle for the RA marketplace, that they don't want to work with a firm that one for a new service element, and then 6 months down the road, the asset manager, senior management says, we're not hitting our numbers. Let's roll them into another group. And then the RAA calls and they find that they're at some, generic broker dealer desk, for the IBD. That doesn't bode well. So it's really important that they show commitment and continuity in their efforts in the marketplace. That trumps everything in that market. The other element of all of this is, so that's just a traditional advisor marketplace, and it overlays a bit with this enterprise RIA. But with the enterprise RIA in this pro buyer environment is, so do we start deploying a national accounts type approach? Do we start looking at them like we do at any institution or any home office where we're working with a gatekeeper and we're working with a due diligence team, and there's more of that official quantitative screenings, and I make sure I've got the PM showing up when they're doing their investment committee meeting and they're making a manager change, right? So the industry is really struggling with what's the best approach. It's still a fragmented market. These firms are big, but they're not as big as traditional institutions, but they're acting that way. So you're seeing a lot of firms really beef up specialists and expertise, and a lot of firms really beef up specialists and expertise in the investment management side, right? CFA, portfolio construction. They're trying to figure out better ways to support and spread their PMs within the marketplace, right? And they're determining at what point do we start layering in a national accounts coverage for these firms. A lot of firms are already using national. It's a difference between the $100 billion shop versus a $10 billion shop on how you should best coverage that. There's also bifurcation of just the investment management. We've got a territory challenge as well. RAs have always been hard to cover from a territory standpoint, but now because of consolidation, you could be showing up at an RA's office in Chicago and you find out that they bought a fixed income team a year ago, and that fixed income team is in LA, and the analyst on fixed income is in LA, and that's outside the territory of that wholesaler. So how are you going to coverage those problems? So there's lots of challenges in this marketplace. I think, again, as it's grown in assets and that centralization, it makes sense, but it doesn't mean that there isn't opportunities with those emerging smaller shops. As we mentioned early at the beginning, it's a new entrance every day into this marketplace. And so today's advisor practice could be tomorrow's 350, 400, and 5 years be at $750 million. So everyone has to really do, I think, a reevaluation of their segmentation and deployment of their sales force. And it's not a one size fits all. Every firm has to go with their strengths in order to deploy properly.
Yes, Dennis. Yes, Dennis. These are such great points. I think that the two things that I really took away is that idea of understanding your buyers. So segmentation is really critical, and understanding what the firms are, and appreciating that there are nuanced differences. As you said, that not every enterprise RIA or mega RIA is the same as another mega RIA or enterprise RIA. So really thinking through about that, understanding the intelligence that's out there about the firm in the market. And the other thing, I really love what you talked about: dedication, consistency, continuity. That's all about relationship. And I think that we all know that in this channel, I think relationships still matter. Even if it's a relationship with a centralized access point, I think it's important. So Dennis, just maybe very quickly, market outlook for RIAs. I think people who want to know more have to buy the study, but otherwise, can you just give us a kind of a 30-second outlook for the RIA market?
So it's going to continue to grow and consolidate. I think even during this difficult period right now where maybe cash is not as easily available to drive M&A, I definitely think as we come out and the economy starts to strengthen even more, for the consolidation down the road. So the mega firms will get even bigger mega firms. There'll continue to be this growth in the marketplace, but I also think there'll be further blurring. I do see efforts where the independent BDs out there building out more capability. So RAs are going to exist across the spectrum now. And so it's going to complex across the spectrum now. And so it's going to complex. I used to say that, tell everyone that RAs aren't going to take over the world. It's just that everyone's going to start looking more like RAs. And I think that's becoming very true in that environment. So I think it's a positive in the sense that we are becoming more centric in how advisors are behaving. I think the key thing now is the outlook is that it's a competitive and saturated marketplace. If you're selling into that marketplace, you need to stand out, and that is going to require you to not only look at it from having the right segmentation for coverage, but it requires you to have a better persona of what's the types of advisors and their underlying clients are, because the bar has been raised, and to differentiate yourself and to help them grow their business, which is top of mind for all of them, growing and engaging new business, it's going to require even more effort from the marketplace. So a client engagement, all those tools we talked about, relationship management is even more critical moving forward. But it's going to continue to be a growth marketplace, and they're going to still be the bellwether of trends, even if everyone else starts to copy what they're looking like and the gap is closing.
And
that was more than 30 seconds. Sorry for that.
No, no, that's good. And I think that you landed so many great points. Again, even outside of the US, there's great interest in the RIA channel. As as I mentioned, flag bearer for advisor empowerment, independence, but also for the fee-based practice, for holistic financial planning practices. So I think there's just much to dig into this topic. We could talk for another 15 minutes, but we're going to take mercy on our listeners. Thank you very much, Dennis. As much as I love to talk about product in this business, at the end of the day, as I said, the battle is won and lost on the distribution front lines, and RIAs is where a lot of action is at. As Dennis pointed out, this is one channel that continues to grow and house many advisors and teams that are very growth oriented. That is not necessarily the case for every single wealth management channel out there. So from that perspective, remains a very attractive target for asset managers. Find the right approach and diversified approach to firms in this channel, which are clearly come in all shapes and sizes. Let us know if you're interested in hearing more about our RIA study. It will be released in December. I personally, you can tell, I'm very excited about it. But that is a wrap for us. I encourage our listeners to come back and join us in the coming months as we wrap up the year. And then we have some fantastic guests lined up for early in the new year. Where has the year gone? As always, I encourage you to, where has the year gone? As always, I encourage you to pick us with ideas for topics or specific industry guests that you would like for us to invite and feature. And in the meantime, thank you on behalf of ISS Market Intelligence and